Good afternoon, everyone. In today's video, I'd like to share two different trade ideas. One of them is going to be in a stock, Home at Home Group Inc., and the other is going to be in a slightly more expensive stock, Hilton. Both have very similar trade ideas where we had a slingshot squeeze. We're using today's sell-off to try and get a better opportunity for our entry price compared to what the signal had, and ultimately we're looking for the squeeze to fire long with a few different ways of trying to play it. For example, in Home here, if we use our cash secured put calculator, you'll notice that the premiums you're collecting are fairly rich, so selling cash secured puts here actually makes a whole lot of sense as a potential trade idea, despite the one loser, 2 out of 3 over the past 5 years. If I switch this over to something like Hilton, you'll notice that while the share price is slightly more expensive, the same strategy here has resulted in a slightly better pattern historically over the past 5 years. 6 winners, 1 loser, so 6 out of 7 over the past 5 years. Those are some statistics that I can live with and a trade that I'd be looking at participating, especially when we're so far holding the 50-day simple. So let's start first with Home here. Using Home, really at any price between this zone, the market pulse, and the 50-day would be ideal entry prices. If we take a look at what that looks like, that's the 27 strike on the options chain here. The 27 strike, you're still collecting right around 6.21% in terms of the premium collected if you use the last closing price. And you can get the same thing if you have the cash secured put calculator, or for all volatility box members, we have the wheel calculator, which combines the calls and the puts. So the 27 strikes here look very interesting with that 6.21% potential return. Break even price is 25.25. Keep coming up, maybe even the Delta 30 calls or puts here, excuse me. You're still collecting right around 120 bucks for saying you would be willing to buy Home at the share price of 26. Each batch of 100 shares would give you right around a 4.26% return in terms of collecting just that premium. That Delta 30 there is fairly nice, and I think this makes for a nice opportunity where you have liquidity, you have puts that you can sell, along with a pattern you can take advantage of. Now, if we compare these same numbers with something like, say, Hilton, and we leave the stock price aside just for the time being, you'll notice here the prices change. For example, if we try and find that Delta 30, where previously we were collecting something like 4-ish or so percent, 4.21%, here you're collecting closer to that 1.64%. So selling a put in Hilton, for example, is much less attractive in terms of a cash secured put as a means of entry versus being able to scale in with something like, say, just a raw underlying shares. So 122.22 as that potential price, anywhere looking for a bounce from that 50-day. Or if we come back into the option chain here, let's change our delta back to volume and try and see if there's anything that stands out. In the 31 days to expiration, it's really this 125 with that open interest of 2,557. So if you could try and sell this as a put credit spread, let's see what that looks like. 125, 120. You're collecting right around 250. If you can collect anything between, say, 270 or so, 250 to 270, so you've slightly skewed the risk reward in your favor, I think that would be an interesting way to try and play this move. You'd like to be a seller of the 125. Using the underlying, I think, is still cleaner. Or you could do something like just buy calls if you find that to be an easier way to try and play this. And finally, using our swing high to swing low here, the current target that we're trying to march on over towards is 134.84. And if we use that as a potential price, so that would be right around that 135, try and create a butterfly around that 135. Let's see what that looks like. The butterfly 130, 135, 140, going for right around 45 cents debit. Maybe you get this for something like 65, 50 to 65 cents. That I think would also be an interesting way to try and play this. 59 days may be a bit too much time, so if we come into something like, say, May, that should offer us a nicer way to try and play the same move into 135 if we get that before earnings or before May 21st. All right, hope this video was helpful to craft a few different trade ideas in Hilton and at Home. Two very different stocks, but the overall strategy that we're looking at playing is, again, the slingshot squeeze, using today's sell-off as an opportunity rather than a means to try and panic, for an opportunity to enter at a better price in an otherwise profitable overall longer-term backtest. All right, take care, everyone. Good luck trading, and we'll see you in the next update.